Hi guys, it's Simon here. So today I want to explain to you why I'm crazy to think this chart is going to move up, even though the 50 EMA, daily 50 EMA is pushing price down and you can see it's struggling to go up. I'll explain to you why I like it, just why I like it as a bullish view. So firstly, we're going to look at the weekly chart, and the weekly chart here tells me one thing: the selling pressure has really been exhausted. All it's doing now here is we're just accumulating just buyers at the very lows here. We can prove it on a lower time frame, but just so you understand, the institutional buyers are now buying at the bottom here already. They clearly are. When I show you another chart, the 4-hour chart, they're not selling here at the highs here. They're just buying at the moment. And all that's happening is retail traders are selling the they're selling the bottom now, simple as that. And I'm going to explain to you why I know that. So the weekly chart looks like it needs to move up. Let's go back to that. I think 1.2 would be an area I would say would be a valid area to go up to. Clearly we've got a head and shoulder pattern I feel is forming at the moment. Obviously unconfirmed, but I feel this is the pattern going to be formed, and I do feel we'll head back lower afterwards. But for the moment, clearly 1.2 is going to be a level I'd be interested in taking a trade from, short as a long-term trade. But on the short-term side, I think it will head back up. Now when we come down to the daily chart, if I take out this triple bottom here, which was valid last month, we haven't really got much to go on. There's a lot of mess there is as such. Doesn't look fantastic, and you are right, it does look like we could sell. Now we're going to look at volume here at the bottom, just to give an example here. So as price came down, huge amounts of volume on this candle here happened. You see that it spiked up high. The candle should be down here somewhere, but it never happened whatsoever. The next day you had higher volume again, obviously not as high as the day before, but overall it's higher than the whole of, let's have a look. Well, virtually since February, that candle here has been there. So it shows you this is the base of it here. We came back up, come back down, and again, look at the volume. The volume is toweling up, and it's on the doji as well. So that to me says that lots of people are buying at 1.157. Now you see this rejection here. This should be, if it was an actual rejection of the daily 50 EMA, it should be high volume, not low volume. That tells me that there's not so many sellers in the market now, and that is retail money, not institutional money. And you see here, it came down again. Institutional money didn't like it, and the volume spiked up. The next day, huge volume again. And now we're just kind of going around no man's land at the moment. Notice this bearish engulfing candle off the daily 50 EMA. That should be pretty high volume, and in fact it's quite low. So notice how this doji here, price never moved, but you had quite high volume. The move up was of really significant volume. The move down though, of same quantity, was nowhere near the volume there. So to me, that says to me that we're looking more towards a bullish aspect here. That's just on the daily itself, analysing candle by candle. Now when we come down to the 4-hour chart, I'm going to show you how we would make a 2-touch trend line valid straight away, and you can see that instantly. You can, and then you can see where the institutional buyers are buying. So firstly, on this 2-touch trend line at the top, for example, it was created there. Pretty much this was the peak of the 2-touch trend line, that there. The reason why, we can see here volume here has spiked up massively, humongous sell off there, and again when you come to this candle here, the volume did pick up for the day there, and you had 3 quite doji candles with higher volume, considering that's the volume of the day it would be. I know it's not high compared to these ones up here, but at the peak of the day, between 7 in the morning and 7 in the evening, for 12 hours, price didn't move nowhere, but volume was quite high. So that there was clearly the trend line formed, and we could just extend the trend line further forward now, and you can see already almost instantly we got a touch there of super low volume. This is retail traders selling, and again here, this doji here, notice how it's super low volume here as well. It only picked up as it started going down. The reason why it started going down is because the institutional buyers want to get a better price, simple as that. So this proves to you now how the institutional buyers are buying now. If you notice here, super high volume on this candle here, that says to me they wanted to buy there. Again, you look at this area here, for example, and the low test had super high volume there for the day, and at the bottom as well. Again, that's the second one. The third one here, the little doji there, super high in volume for what it is. I know obviously the volume before is a little bit higher, but with that kind of volume, you really should be expecting big moves. Considering that candle there, this candle here, sorry, here, in this volume here is almost as much as that. But look how big the candle is there. So the fact that that didn't go down hardly anywhere does tell me that the institutional buyer, most likely in the last hour, are pushing that back up again. And then here as well, for the volume for the day, again for 12 hours, price didn't move nowhere at all. So that there says to me that the upward sloping trend line is being respected with higher volume, and the downward sloping trend line is now, although being respected on low volume. That is now just market makers pushing price around. You're going to get squeezed in. So if this is the case on this chart here, the 4-hour chart, where the higher lows are forming on higher volume, and the lower highs are forming on low volume, that does tell me that the price will break out to the upside quite nice. Now, with these type of patterns, you also get a 1-to-1 pattern distance, and all that means is really you just get a 1-to-1 ratio of where the pattern started and finished. So this is the 1-to-1 ratio. We can draw it there now, and you just want to have a breakout of this pattern, and when you do that, you're doing up at 1.207. Depending when it breaks out, it's going to break out there roughly now at the moment, so 1.206, which does line up with our weekly perspective. We put 1.206 back in on the weekly chart, just to give you an idea where that actually lies with this candle on the other side. So we'll put it in there. We'd make it a different colour as well, guys, for you so you can see it. 1.206. We'll change it to a dark blue. Push OK, and you can see. Just delete this head and shoulder pattern. Perfectly in line with the actual left shoulder there as well. So for me, that says to me that everything is now lining up for at least a 1.20 move higher, and it's all formed on this lower time frame here. So on the first part of the screen you saw a trade which I'm about to enter on Monday. That's what I'm looking for there. A nice 60 something pip stop there. It will be about there somewhere, 70 pip stop, something like that. And we can target quite the highs of just 1.2 to give you an example. 1.199, just so not so far away. It's a 4.7% trade there. That's a beautiful trade to take. That is, for me, that is in line with the investors and the bankers. It may respect this downward sloping trend line, but to be quite honest, guys, the buyers are at the bottom here massively. The sellers are not at the top, and the retail will keep selling this and get trapped within this pattern, and then they'll just get stopped out, and price will just rally up quite nicely and then carry on trending to this 1.2 area. Okay, that's how I would identify new trends when they're going to form. I know it's a little bit more detailed, a little bit more complicated, but I want you to understand where investors are buying at the bottom and where the retail traders are now selling at the top. So you had investors to start with, then retail afterwards. That's the difference here, yeah? And that's why it's so crucial to understand volume.